Everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. Well, in today's trade, the market was able to reclaim that 10-day moving average. We'll see if we get some follow-through in the next day or two. Bitcoin continues to churn right at that Wave 5 target, and the U.S. dollar is starting to gain some strength. Let's see what all that means by looking at the charts. At the time of this recording, it is 3:18 a.m. on Tuesday night / Wednesday morning. Currently, the futures are down 1.5 points, so pretty flat. Taking a look at the chart of the market today, I'm going to spare you drawing that zigzag that you've seen in ad nauseum, but I'm going to highlight where that 381 level is. That was the top of that 100% C wave extension, and also add on the moving averages. As I said in the intro, the market did reclaim the 10-day moving average. Yesterday, the market moved to the upside early in trade, but then sold off towards the close. Still staying above that 381 level, but barely closing at 381.72. Today, much better day. A little bit more follow through. We opened, did trade lower for a bit, but then rallied and closed at a level back above the 10-day moving average. But you know how this works. We've talked about it a lot. When you have a break of a major moving average, support, resistance, break out of a triangle, whatever, you need a follow-through day. You need a confirmation day. So we'll see if we'll get some confirmation out of the market. The problem is we're going to have a little bit more resistance here, likely at that previous Wave 5 high. It's a nice pivot point high right there at the Wave 5 extension that occurred back on the 16th of February. So I would imagine that the shorts are probably going to try to make a stand there as well, meaning that we have a little bit of resistance here for the market to move forward. If we are able to break above that level, get some confirmation above the 10-day moving average, and break that Wave 5 high, that could spell the all clear sign for that run up to 420 that we've been talking about for quite a while. At this point in time, though, you still have to be a little bit cautious with the fact that we have resistance ahead of time, and the fact that yesterday, even though we rallied quite a bit, we sold and closed at the low of the day. That's never a positive thing when you're trying to break and move to new highs. Looking at the U.S. dollar, big news here is that the Elliott Wave pattern relabeled. Elliott Wave is great. It's one of my favorite things about Elliott Wave is when the pattern changes, it's very quick to relabel. That it helps you to make adjustments to any trades that you may have along that security that gets relabeled. In this case, we don't have a trade on the U.S. dollar, but you can see that the dollar is sprinting to the upside here. At this point, we could possibly come up and retest these highs, which would be a pretty significant move in the market for the dollar. Let's take a look at the DMI because we want to see if there's support there, and there is. So pretty good looking DMI. You can see the positive directional indicator, the negative directional indicator, nice separation there. ADX between both of them, climbing above not just 20 but 25, which is a level that a lot of the analysis regarding the DMI as an indicator talks about as being important. I personally look at 20 as being just a touch more aggressive. And then if we look at the moving averages, you can see that possibly a little bit overbought with the dollar. You can see it rested a bit today. Maybe we get a couple more days of rest along those lines before it looks like it wants to try to move up towards that 94, 95 level. Some increase in the dollar would probably be okay and indicate a view of economic strength, but you don't want the dollar to get too strong, which it really just sounds counterintuitive, doesn't it? You don't want a strong currency, but in this world, countries are all racing to have the most devalued currency. Looking at interest rates, our interest rate's going to go through a taper. David Tepper, who's one of the hedge fund managers that I actually listen to, have a lot of respect for, was talking on one of the financial networks that he felt the biggest part of the interest rate move had already occurred and that they were going to settle down a bit. So when we take a look at the 10-day moving average, you can see that, yeah, we came back, but they had gotten overbought as well. So they're correcting that overbought condition. Remember the saying, no security in any time frame gets very far away from the 10-day moving average. So in this case, the 10 days coming back. Now, looking at the DMI here, you can see that the ADX is way above 60. So that's an indication that David Tepper might be right. Strongest part of the move does appear to be over. Now the question remains, do we consolidate a bit or could we correct back down here and label that wave 4 at this point in time? The 30-year, very similar pattern. Looking at the DMI here, also really strong ADX, also the ADX outside positive directional indicator telling us that once again the strongest part of the move is over. Really no separation there with the 10-day moving average. The 30-year has been hugging that. So we could see a bit of a pause here, possibly even a pullback in interest rates, which would be welcome for not only the market but the metals. And you can see that gold did try to bounce back today. Pretty decent move, up over 2% in today's trade, and just in time, because if we condense this chart, you can see that 160 level, I'd been mentioning the 175 before. Well, we're put a lot of distance between 175 and here, so breaking that 160 level would have meant, with follow through, would have meant likely a move all the way down here to test that entire impulse move that started last March. So just in time we break back above that support level, but here again we need the confirmation or follow through day, and with the break above there, a doji. So it gapped up with a doji. Not the most ideal environment for a follow through or confirmation day, but nonetheless that could happen to where we could at least be seeing a corrective move up here to create this wave 4. So that kind of lines up, right? If interest rates come down to create their wave 4, gold and silver, we'll look at silver as well, moving up in their respective charts. Now there's different pattern here in the SLV. Here we would be looking for the SLV to break from that level there, that point from that old triangle that's been creating support and resistance ever since that break move. And if we could get back above there, then silver may go up, and I don't know if it's going to retest that squeeze attempt there on SLV anytime soon, but it might. Anything could happen once it breaks above here because there's so much resistance right in this area. So break above there and it may continue and take off and run. Also in the intro is talking about how Bitcoin has been consolidating. Just as a reminder, there is that wave 5 high, and you can see yesterday closing dead in the middle of it again. I mean, look at that move right through there. But this whole entire month has been churning right in between this tap box, right in this wave 5 target. So the question becomes, do we move up and have an extended wave 5, or do we start to correct back down towards the previous wave 4? What are your thoughts on Bitcoin? People talk about it all the time, so what do you think? Do we break higher from here? Do we pull back to the wave 4? Leave a comment and let us know what your own personal thoughts are. Now look at the DMI, and you can see that it would need to reset itself, and it might be trying. I prefer when the ADX comes down because you can see clearly it was due for a pause with that set of lower highs. Each time the stock went higher, that's about as much divergence as you can get in a chart. As the stock was moving up, or Bitcoin was moving up and making new highs, it was met with lower and lower highs on the ADX, so each move higher was getting weaker and weaker. So set itself up for a pause, potentially a pullback before the next move higher. We'll see. The two directional indicators are starting to separate again, however, so we could see those two break apart and that ADX curl back up. It's just a personal preference that I have, that I like to see it get down to 20 and move back up. It makes a stronger move for a follow through or a continued move higher from there. I also wanted to update you. A couple recordings ago, I mentioned that one place to consider putting money for the upcoming year was in value, and we looked at VTV as a chart. I just wanted to share with you the fact that we actually did send that out as an alert to our subscribers, and this is what the alerts look like. Our trade listing page on our website, you can see that the alert to enter it went out on March 2nd. The alert to close it went out on March 8th, so 5 days in the trade, right around 53%. So just wanted to show you that put our money where our mouth is when I'm talking about these things, and not just jawboning. We actually do follow what we say. So this move to the upside here got a bit overbought, so it's time to go ahead and take gains, and that's what we did. Other areas to consider, though, and we're going to keep an eye on value for the rest of the year. Finishing off with the VIX, as we always do, as you can see, we're coming down here, and maybe coming back to try once again to test that area between, you can draw your favorite line here, anywhere between 20 and 22. You could draw a support line and be hard to argue with, but heading back down lower to test that area again, then we'll see. Does it create a bounce? Do we break it this time? If you like this video, please hit that like button, and better yet, hit subscribe. You'll be notified immediately when one of these recordings is posted. We really appreciate your support. Thank you. Hope you have a wonderful week. Be back to talk to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.